Hey everybody, this is Jim at SP500chart.com. It's 4:15 in the afternoon on January 28th here in just north of Atlanta in the year 2014. I want to remind you before we get into this that the website and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're starting with a daily chart. I usually don't do that because we're typically follow the more minute-by-minute things that reveal themselves on a 5 or 10-minute chart. But there's a couple things that I want to show you, and there's also a trend line that I've put back on this chart that I kind of got rid of a little ways back just because it was seeming to clutter things up, and it didn't seem like it would be that important, but it might have something to say. And the reason we're looking at this is I want to remind you about this long-term support line that goes all the way back to the middle of December 2012. Okay? It does not line up perfectly. That's one of the things that makes the read on anything based upon this line difficult. For example, if we line it up with this bottom and this bottom, well, then we've got touches here. We're below it here, we're significantly below it here, and then we touch it again here. If we line it up here and here, well, we hadn't touched it yet. If we line it up in that previous spot, we are currently a good bit below it. So this is not really an exact science with regards to this trend line. So I mentioned a few days ago, let's just think of this turquoise colored line as being kind of fuzzy. Okay? Now, the trend line that I've put back on this chart is this one right here. You'll remember back in the summer and late spring of 2013, we had a series of 3 tops that formed. Placing this line on top of these 3 tops, and we had it there for a while, because you remember when we got over that line, we said, look for a back test, and then we should rally on up a bit. And as a matter of fact, we even measured a target from this. I don't think we have not yet made that target. But what I want to show you is that if we zoom in on this, and I'm going to do this while still in a daily mode to make sure that everything lines up properly. And again, these don't line up absolutely perfectly, but I'm going with the first and last one, and I'm trying to sort of average it out. If you look and we extend this out, that looks to be at least providing a little bit of a bounce. Now, I'm going to make another change on this chart. I'm going to take this line and I'm going to leave it. I'm just going to make it a really light color. And I'll tell you why I'm doing that. Because this support line and this resistance line define a broadening top. But as I look at this chart, I'm absolutely convinced of the validity of this being a technically significant low, because we came into it and made a number of days down, and then we had a number of days up. But when I look back at what is defining this first point, and if we don't have this first point, then we don't have this line, okay? When I look at what happened here, we had a down day that came back to this back test, and then we immediately rallied right back up. And as I look at that and I consider how we've defined all of our other trend lines as being lines that took a number of days or even weeks to get to, I'm just not absolutely convinced that this quick dip in recovery is necessarily a legitimate place to place the beginning of what is a support line that carries with it some fairly significant implications. So I'm just going to make that really a light color. Now, one other thing I want to do here real quickly, I talked about the potential of us being in a rising wedge, and that wedge broke down. And remember, we also talked about the fact that sometimes you will get a wedge pattern that takes you from a support area up to a resistance area, and then when you break down, instead of getting the full move back down to where the wedge began, which in this case would be in the mid 1600s. And just between you and me, if we get down to the mid 1600s, we have to consider that that we may be forming a significant top. And when I mean significant, I don't mean intermediate. I mean like a major top, because we would be then taking out this blue line. But let me just stop for a second. There's the test that we do sometimes, and this is something that, honest to goodness, I believe this is unique to my view on technical analysis, because I've never seen anybody else talk about this, and that is that little snapping that little midline in your chart between your wedge or your triangle pattern, and lo and behold, that does seem to confirm what we've been considering over the past, probably the past couple of weeks, that we may be in an ascending wedge. The question now becomes just how much selling pressure is going to take place, and are we going to actually get down to the point to where we're challenging some of these levels. Let's say even 1700. Is that in the cards? Well, we've got something that we can kind of use as a gauge, and it's really pretty simple, and that is our trend lines. We've got this gray line, and we've got our teal colored line. We're currently hovering around this fuzzy teal line. We bounced on this gray line, and this line right here is moving, is slightly slanted upwards. So that means as we trade on into the next few days and next weeks, we can watch this, and we can watch this and see if this wedge is really going to take the markets down, or is this simply one of those moves from the bottom of a channel, which could be this line right here. Remember, I stuck this on the line on the chart mostly because it was parallel to this top line, and let me adjust it just a bit there. Okay, there's a potential support line. See, it's parallel to that top line. So is this pattern going to really wreak havoc on the markets, or is it just the way we went from the bottom to the top, and now we're going to find some way to find support again in the weeks ahead? That would be the bullish case. Now, the potential for a bearish outlook, and again, we would know this when we see what starts to happen with our trend lines, would be if we are potentially forming a head and shoulders here. And the way head and shoulders often form is is in particularly in the S&P, we've had a tendency to get some patterns with some pretty flat necklines. And if this were the case, then we would have our neckline established by the lows here in the week of the 16th of December, and then the low that we hit just yesterday. So if we rally up but fail to meet a new high, let's say we rally up to this light blue line right here, which is currently at, let's call it 1817, 1818, 1815, something around there. So let's say if we rally up about 23 points from where we closed today, and then we start to look really weak on this line, and then we come down for another trip down to about 1775 and take that out, then that would be setting up a move to test our long-term support line down here, which is this blue line. Again, that's a little premature because all we have is a, and I don't even want to call this a left shoulder, but we have what could be a left shoulder and what could be a head. We do not have a right shoulder yet. So let's see if maybe that's what we end up with, and if it is, then that move down to the low 1700s, very low 1700s, could be sufficient to kind of make this rising wedge happy, if you will. So I see two scenarios right now. The bearish is what we just talked about there, where we end up with a head and shoulders top. The bullish is that we stay clear of breaking down through that 1770 area, and we either rally off of this point, or we could potentially go sideways and up a little bit and then rally in a number of weeks at that point to set hopefully a new high in the S&P. But guys, these two really down days, three significant down days in a row, that really kind of casts a little bit of a pall, I think, upon this chart. I mean, we knew we were dealing with a potential rising wedge, but right now we still don't quite know the intent of it. Now, in yesterday's video, I mentioned that we were in this kind of funky looking descending channel that wasn't parallel, but rather was kind of broadening. And you can see that today, pretty early on, we broke over that line, not by a technically significant margin, but then we came down and back tested it, and then we just kind of meandered sideways for the rest of the day with a slightly upwards bias. I think that's a good sign that we could be at least ready to have some kind of relief rally. That could very well take the form of something that happens after a back test of this line. Okay, so coming back down to the 1770s right now would not surprise me. The market could easily lose 22 points off of today's close, and we still have what appears to be a reversal in the making. The other thing that's a potential here is that we are forming a little ascending triangle right here. There would be your top line. There would be your bottom line. Now, in all fairness to the astute observer, you'll notice that we're very near the apex of this, and that's not a particularly bullish sign. Usually you want to get out of these triangles 3/4 to 80% of the way through their formation. But let's see what happens tomorrow. This line is certainly, for today at least, served as resistance. And so we're going to keep these on the chart. We're just going to keep them in that gray fashion. The other possibility, again, as I mentioned, is this is that we're breaking out over this, but over this resistance line. But we're going to break the bottom line, come down for a back test. And at that point, I would expect a renewed rally off of a back test of this broken resistance line. So it could go either one of two ways and still have a short-term bullish outcome. That would be take this out immediately and start to head up, or take this out, back test, then start to head back up. That either one of those is a possibility. So guys, hey, appreciate you taking your time out of your day to watch this video. Let's see what the intent of this rising wedge is. Is this a game changer, or is it just a timeout? Okay, so thanks for watching. Take care.